Hi, this is Abhiram and welcome back to my channel. In the last video of this series, we saw how to execute the interest calculation program for a credit open items on the customer. In this video, I'm going to tell you how to do the necessary configurations for that. But before we go further, do not forget to like and share this video and subscribe to my channel. Also remember, now you can join my channel and contribute in making more videos. So let's jump in. The primary key for calculating the interest on any business partner is the interest indicator. Interest indicator is mentioned in the business partner under the company code data, be it a vendor role or the customer role. We mention it under the company code data under the account management section as we see here. Interest indicator is what that determines what kind of line items are to be considered for calculating the interest, whether it is open items, whether it is cleared items, or whether it is all the items. And it also determines the days of tolerance that we need to give for calculating the interest, and it is the key for determining the interest rate, and it also determines whether the interest calculated should be posted on the account or not. So let us go to the configurations. So first we will go to SPRO. Under financial accounting, under accounts receivables and payables, business transactions, here we have interest calculations. So here we're having four different categories of configurations. The first one is the interest calculation global settings. So here we define the interest indicators and then we go to the interest calculation. We define how the interest is to be calculated, what rate is to be determined and everything. And then we go to the interest postings, which determines what are the GL accounts that needs to be hit when the interest is posted. So first let us go to the interest calculation global settings and here we define the interest indicator. So interest indicator, as I said, is the primary key for determining how and when the interest is to be posted on a particular line item. So let us click on new entries. As we want to calculate interest on the customer open items, we need a debit interest calculation. For that, we are defining an interest indicator here. So let us give the interest indicator name as D1 and we are going to give the name as debit interest indicator. And under the interest calculation type, we are defining whether the interest is to be calculated on the items or whether on the total balance of the account. So for now, we want this to be calculated on an individual open item, that is the invoice on the customer. So let us click on item interest calculation and save it. The next step is prepare item interest calculation. So what is item interest calculation? Item interest calculation is an additional parameters that we are going to give to the interest indicator that we have created in the previous step. So if we go here, we'll give the interest indicator as D1 and for D1 we are going to define how the interest is to be calculated. If you see here, we are having item selection. Item selection defines what kind of an items are to be considered for calculating the interest, whether it is open items and you want cleared items or only the items that are cleared with a payment or no cleared items at all. So for now, let us consider an example where we are going to calculate interest only on the open items. We do not want any cleared items to be considered for this one. There can be cases or there can be some business requirements where you are going to charge interest even for the cleared items. Then you are going to select either of these two. If you want all the cleared items to be considered for calculating the interest, then we are going to select the cleared items. And if you want to select the and if you want to calculate interest only on the items which are cleared with payment, we are going to select this indicator. But for now, we do not want any cleared items to be considered and we are going with open items. The next section is interest determination. So here we are going to determine how the interest is to be calculated. Always calculate interest from net date. This indicator, when we enable this one, let us consider a case where an open item is expanding more than 1 month. So for example, in the month of January, the interest has already been calculated for this open item. And even in the month of February, this invoice is not cleared. So even again in the month of February, when we run the interest calculation program, the program picks up this invoice again for the interest calculation. So when this invoice is picked up for the second time, how do you want the system to consider the baseline date for calculating the interest. Do you want it to be calculated only for that second month, which is from the 1st of February, or do you always want to consider the net date of or the due date of the invoice as a start date for calculating the interest? Usually we do not select this one because we do not want to calculate the interest again for the period for which it has already been calculated, and we will start only from the 1st of February. But if there is an agreement that you are calculating again for the whole period for which this invoice is open, then you're going to enable this one. The reference date gives what date is to be considered as the date to start the calculation of the interest, whether it is a baseline date for the net payment, which is the due date, or the document date, or the posting date, or the payment baseline date. So let us take posting date as the date, and the calendar type defines how the calendar days are to be treated. For example, if we go here, we're having it should be 30 days per month and the total year of 360 days, or 30 days of 365 days, or if you want an individual month, the number of days for individual month like 28 for February or 31 for Jan and all those, and but the total number of days per an year is 360 or 365. So we are going to use G, which is different days as per the calendar month, and the total number of days in a year is 365. This calendar type is used to calculate the interest rate. Usually the interest rate that we define is an annual interest rate, and in order to calculate the interest every month on a pro rata basis, this calendar type or the number of days in a year and the number of days in a month is what is used as a basis for calculating or arriving at the interest value or amount for that particular month. Next, transfer days. Transfer days is usually the time taken for the payment to reflect onto your account after the customer had made the payment. There can be cases where customer had made payment on the 1st of January for a particular invoice, but the bank has taken 3 or 4 days for that amount to reflect onto your account and you to post into your bank account, or in order for you to clear the invoice in the SAP system. So this gap between the payment and the time taken for clearing that particular invoice in SAP is called as transfer days. So if we mention any particular day here, for example, if I mention the value as 5 days, and if the invoice has been cleared on 5th of or 6th of January, then the system will consider the payment date as 1st of January because it considers the 5 days between 1st and 6th is the time taken by the company to clear that particular open invoice after the customer had already made the payment. We are not getting any value in this one. The next one is tolerance days. Tolerance days, as the name says, it is the tolerance that you are going to provide to the customer in order to start the interest calculation. For example, if an invoice is due on today, you want to give a tolerance of 3 days, or you want to wait for 3 more days for the customer to make the payment, beyond which you are going to start calculation of the interest. Then you are going to mention 3 days as the tolerance days. Here also we are not giving any tolerance days for our example. And the factory calendar ID. The factory calendar is the holiday calendar for that particular company. This holiday calendar is used to post the interest or calculate the interest. For example, if you do not want to calculate interest on weekends, or if you do not want to post the interest on the weekends, you want to post it only on the weekday, or you want to define the number of days that is followed in that particular month for that particular country, then as per the holiday calendar or as per the factory calendar that is mentioned, the interest is calculated. So for this company code, which is of Great Britain, I'm giving GB as the factory calendar. Here we're having calculate interest on items paid before the due date. So in case you want to calculate the interest which are not yet due, the open items which are not yet due, then you are going to enable this checkbox. Here you're having only calculate interest on the debit items. So there can be open items of both types. Here we have just selected whether it is open item, but we did not mention whether it is an credit item or a debit item. So usually when you're having a vendor invoice, or when you're having a customer invoice, then you're going to debit the customer. So you're going to have debit open items. But there can be cases of credit note where you have posted a credit note onto the customer and that credit note is not yet knocked off with any other invoice, or you have not made payment to the customer for that particular credit note. So if the agreement says that you are also supposed to pay additional interest to the customer if the payment is not done on time for the credit items, then you are going to uncheck this box here, which will also consider the credit items in addition to the debit items on that particular customer account. The same way it will work for the vendor also. So let us take both these items. We are going to take debit items as well as the credit items. We are not going to restrict anywhere. The next section is the interest post processing. Post processing here is after the interest is calculated, the interest should be posted onto the account. So that is what referred here as post processing. The amount limit is the minimum or the maximum amount limit that we are going to give, so that the system will post the interest document only if the interest is beyond this amount limit. For example, if I mention here as £1,000, only if the interest that is calculated is more than £1,000, only then the interest posting is created. This is useful in case if the interest is charged only for one day. For example, if the customer is delayed by only one day, then for example, for a particular day you are calculating the interest amount is calculated as probably £1 or £2, and your operational expenses, for example sending an email to the customer or sending a letter to the customer or follow up to the customer, is around approximately £5 for a individual customer, then you do not want to charge this interest of £2 and spend another £5 to get that money from the customer. So in such cases wherein you are having more operational expenses than the interest that is actually to be received from the customer, you are going to not post that interest onto the customer by giving an amount limit here. And no interest payment defines, you do not want the system to post the interest if you end up paying interest to that particular customer. So as we defined here, we are having interest to be calculated both on the debit as well as the credit items. So if the credit interest, that means the interest that you are supposed to pay to the customer, is more than the interest that you are supposed to receive from the customer, then in that case, if you do not want the system to post any interest on the customer item, then if you enable this checkbox, that interest document is not posted. Output control determines the letter that you want to print to send to the customer that this is the outstanding interest that is supposed to pay. And here is where you are going to define the number ranges. Post interest determines whether the interest calculated should be posted on the account or not. We are going to enable this one. And here we are going to define the payment terms and the tax code that is supposed to be used for calculating the interest or while posting the interest. So let us give a standard payment terms, which is 001. That means the item is due immediately. And post with invoice reference. When you're calculating the interest on against a particular invoice, if the interest document should also contain that particular invoice reference in the assignment field, then you are going to enable this checkbox so that the system can automatically pick up the details from the invoice onto the interest document. In addition to the invoice reference, you can also select other fields here which you want the system to pick up from the invoice. For example, if you want to pick up the business area, or you want to pick up the transaction, the assignment field, the payment terms. So there are different fields, or you can in fact add your own fields here for the system to fetch those details from the invoice onto the interest document. So these are all the different details or parameters that we are defining at the interest calculation. So let us save this one. So these are all the settings that we need to do for an interest calculation. And next, if we go to the interest posting, we are going to determine what is the GL account or what are the accounts that needs to be picked up for posting the interest. So account determination for item interest calculation, AR and AP. So for each item interest calculation and the account balance interest calculation, we are having two different areas, which is accounts receivable and the accounts payable. So if you want the interest to be calculated for the customer, then we are going to select this one for the item interest calculation. Let us create a new entry. We are going to define the GL account determination based on four parameters. One is the business transaction. The business transaction defines what kind of a transaction or what kind of an interest posting it is, whether it is the interest received or whether it is the interest paid posting or the revenue or the expenses. So for now, we are going to calculate interest, or we are going to post the interest that we are supposed to receive from the customer for the open items. So we are going to select it as interest received posting. And the next parameter is on the company code. So let us give our company code here. The interest indicator is the interest indicator that we have defined in the first step. In this case, it is D1. And the business area. If you are using any business area concept in your company code, then you are going to give that particular business area. But if you want this to be posted across the business areas, then you're going to mention plus here. It is mandatory to give this value as plus if you are not having any specific business area. Otherwise, the system will not continue forward. Now here we are having the posting keys, the special GL indicator if you are requiring, and the account symbol, which will in fact tag the GL account on which you want to make the actual posting. So the first one is posting key. Posting key is the normal posting key here, which we will use for either debiting or crediting. So when we are supposed to receive the interest from the customer, then we are going to debit the customer account and we are crediting the interest received account. So let us debit this one. We are going to give the posting key as 01, which is which is the debit invoice that is posted onto the customer. If you want a special indicator to be used here, then we can give the special GL indicator here. If not, we can directly give the customer account. So here we cannot mention the customer number because this is not something that we are defining for a specific customer, but this we are defining as a general item. So this can be used for different customers in a company code. So how are we going to map a particular customer account here? That we are going to do via account symbol. So if I see the different account symbols that are available, we are having whether it is an interest received or the interest paid or the customer posting. So we are having the account symbol, and for this account symbol, we are either going to map a GL account or we are going to mask a particular customer account. So it is the customer posting. The customer is getting debited here, and we are going to credit the interest received GL account. So we are going to give the account symbol as interest received. Once this is done, let us go to accounts and give our chart of accounts here. Here we are going to have what are the different account symbols that we have used for defining the interest indicator GL mapping. And for each of the account symbol, we are going to give the GL account or we are going to give the masking in this fashion so that the system can pick the customer account directly. 1000 is the account symbol for customer. So for customer, we are not going to define any particular customer account number here or the business partner number. Rather, we are going to give masking by adding plus 10 times so that the system will automatically determine the customer number based on for which open item we are running this interest calculation. And for other account symbols, we are going to give the respective GL account. So 001, if you see, this is for the interest received, and this account is the interest received GL account that I have already mapped. And similarly for the interest paid, I have given another expense account, which is the GL account for the interest paid. So let us save this and go back. Till now we saw how to create an interest indicator and how to define the various parameters on how the interest should be calculated and what are the GL accounts that needs to be posted when the interest is calculated. And the next step is to define the interest rates. For interest rate, we do not define the rate of interest directly, but rather we go with something called as a reference interest rate. So if under the interest calculation node, we can see the define interest rates, enter reference interest rate values and time dependent interest terms. What is a reference interest rate? A reference interest rate can be any standard or a market predominant interest rate. For example, it can be the LIBOR rate, or you can take any such market prevailing rate as a reference, and on that you can add or subtract a certain margin like LIBOR plus 1% or LIBOR minus 1%, so that your rate of interest can be dynamic all over duration. So for this purpose, we will use something called as a reference interest rate. So in our case, we are going to define our own reference interest rate. So let us create a new entry and let us say it as D1 ref interest. So we're saying it as D1 reference interest rate. And what is the validity of this particular reference interest rate? Let's take it as 1st of January. And the currency for which this rate is applicable. And save it. Under the reference interest rate values, we are going to define the rate of interest for this one. Let us click the new entries. And let us select our reference interest rate, which we have created just now. And the validity. And let us give some interest rate as 10% or 15% or any other rate that you require. You can mention it here. So let us take it as 10% and save it. So this interest rate, what you're mentioning here is an annual interest rate. It is 10% per annum. And this depends on the calendar that you have selected in your interest indicator, like the number of days in a month and the total number of days in a year. Here we are going to define what kind of a rate is this one. Let us create a new entry, and our interest indicator is D1 and our currency is GBP and the effective date is 1st of Jan and the sequential number The sequential number is used when you want to define an interest rate which is on a slab basis. You can have interest rate either a standard value like whatever the percentage that we have mentioned for all the open items or any level of amount, or you can categorize your interest rate in such a way that the interest rate differs with the total open amount. For example, if 1 to 1000 GBP, if you want the interest rate to be of 10%, and from 1000 to 5000 it should be 15%, and above 15,000 GBP if you want the interest rate to be 20%, then in that case you are going to create three different variants of this particular interest indicator, and for each of those you are giving the sequential number as 1, 2 and 3. In our case, we are creating a standard plain interest rate for any amount, so we are not giving any sequential number here. So what is a term? A term defines what kind of interest it is to be calculated, whether it is a credit interest or debit interest. And in each case, whether it is an interest that is calculated on the arrears, which is your open items, or the interest that is calculated on the balance. So in our case, it is a debit interest, which is arrears interest calculation. Because we are having a customer account and the open debit balance on which we are trying to charge interest to the customer. And now here is where we are going to link our interest indicator with the reference interest rate. So our reference interest rate is D1 REFINT. And on this interest rate or on this reference interest rate, you can add certain amount of surcharge. Or surcharge is nothing but a rate which you want to add or subtract from this particular interest rate or the reference interest rate. In our case, we are not taking it anything. If we add any, for example, if I give the value as 1 here, then 10% plus 1, which is 11%, will be my interest rate which I'm charging to the customer. Amount from is the minimum amount limit for which only after which you are going to charge interest. So this particular rate, whatever we are mentioning here, this will be applicable only if the open items are more than this particular amount. So in our case, we are not giving any minimum amount. So even if the amount is £1, then the interest will be calculated for that particular open item. So let us save this one. The next item here is define fixed amounts for interest calculation. This configuration you can use to add any fixed amount in addition to the interest that has been calculated based on the reference interest rate which you have added to your interest indicator. For example, we are using 10% of interest rate, and if the open items is £1,000, 10% of the interest for that particular year will be calculated as £100. And on that £100, if you wanted to add any other additional amount, probably you are trying to cover your operational expenses for which you are sending the letters to the customer or doing the follow-ups. So on each and every invoice, you can add certain additional amount in addition to what has been calculated by the system. If we are giving the fixed interest amount as £10 here, so over each and every invoice, for example, for one invoice, if the calculated interest is £100, on top of that, you are going to add £10. So the total interest that is charged for that particular invoice will be £110. We are not giving anything in our plain scenario. So this is the end-to-end configuration required for calculating the debit interest on the customer due items. Hope you have liked it. If you have any questions, please drop it on the comment section and I will answer those. Like and share this video, and do not forget to subscribe to my channel if you haven't already, and get notified on my next video on how to calculate interest on the loan items in SAP S4HANA. Also, now you can contribute for many such videos by clicking on the join button and become a super member of the channel, and also get access to member exclusive content waiting for you. See you in the next video, and until then, stay safe.